The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN just after 9 a.m. Eastern Time Wednesday morning. We got some retail sales out this morning. The market's been trending lower overnight. Most of the night, been chopping around a bit since we got the retail sales at 8:30 a.m. this morning. Pretty flat numbers, but a little bit of a divergence as, of course, you have energy, gas contributing to that, pulling back. Some of the other areas still pretty resilient. On the retail consumer side, we'll get into that in a moment. But right now, you pick up the S&P. This is a 15-minute chart. Yesterday, you accelerate to about 43.27, a little bit of a sell-off at about 2 p.m. Eastern time in the market. And then check it out. I mean, since 2 a.m. Eastern time, it's been a slide to negative territory. We were at about 43.15. Yes, 43.15 to be exact. You're 45 points below that level. That's more than a full percent just from where we were at about 2 in the morning. And you zoom in on the volatility, not really much volatility on the retail sales number, considering we had already traded lower by about 35 points in the S&Ps. NASDAQ 100, we're negative 1% right now, off 138 points. The Dow's off 0.6%, 33,897. We were over 34,000 just yesterday. Russell sitting over 2,000, but barely. Russell right now negative by 1% as well. Bitcoin pulling back, off 1.6%. Ethereum off about 1% right now. We were up above 1950 overnight. We're approaching 1850 right now. Crude, 86.69. We actually got an 85 handle. We talked to our man Teddy Kegstad at 40 past the hour. We'll talk a little bit of crude, notes and bonds. We'll talk some Forex, of course, as well. Always interesting. So we have retail sales, but we also get today our Fed minutes. 2 p.m. Eastern time today. We'll get Fed minutes from the last meeting, seeing maybe what they have to say, some guidance going forward. We'll get the gold contract this morning, negative $4. Gold continuing to slide from where you were last Friday, $17.85 for the gold contract. Silver right now, negative by a quarter. You see that slide in silver, down about 50 cents from where you were overnight. And we jump to notes and bonds. We're getting some lower price and higher yield, but we have a bounce going on since that retail sales number. We were down at 118.18. You got the 10-year. You're talking about almost up up half a point almost from where you were at 8:30 this morning. We're right back to where you were chopping around overnight. That's going to correlate to a yield of 2.86%. 2.86%. You check that out. Place it on a daily. The 10-year, from the move it's had in the middle of June, okay, pretty interesting in terms of the price action we're getting and the yield that we're getting in the 10-year, considering the market is pretty much right at near highs, right? You had the market pretty correlated. We have the 10-year, okay, at about 3.5% in June. What happens? You have the price of the 10-year rise. You have yields come back down pretty dramatically. As yields come back down, some of the growth stocks, some of the whole market accelerates higher, right? Well, we had lows in yields August 2nd, okay? And I got a lot of Fibonacci's. I got to take off some of these just to have some clarity here. August 2nd. August 2nd, folks, the S&Ps were at 4,100. We've climbed 200 points above that price level. At the same time, you've had rates, okay, now the 10-year pushing 2.86%. I think we're approaching about 2.5% when we were at that price level. So you have had yields rising a quarter basis point as you've had the market drift up over that period of time. You're talking about the S&Ps, about 200 points. You zoom in on the NASDAQ to find where we were. You're talking about 500 points about on the NASDAQ 100. So not quite above. S&Ps maybe about 5% up from where we were as you had yields right at that low of 2.5%. At the same time, you have the NASDAQ 100 up about 2.5% to 3% above where we were. Just keep it in mind, because I imagine that relationship is going to maintain its correlation, and either we're going to get a little bit of a market pullback as we have yields rising yet again, maybe talking about that the market is pricing in more hikes from the Fed, or just greater economic growth that will give them room to hike more, or what do we get? Or maybe we get yields coming back down on that side of it. But I imagine they're going to recalibrate to be a little bit more correlated, because you're talking about 2 full weeks now that we've had yields going up and the market going up. Not always the case, especially right now when the Fed is so important in terms of what's going on. All right, let's get into those retail sales numbers. Excluding gas and autos, we have a rise of 0.7% in July. Other categories suggest consumer spending remains resilient, okay? The headline number, though, was flat, 0.0%, okay? When you subtract gas and autos, the core number, the core here is the line of this chart. You were talking about an estimate of 0.4%. We actually come in at 0.7% for the month. Gas really bringing things down. We had a broad increase. Otherwise, 9 of 13 retail categories showed increases. Building materials, non-store retailers, electronics. Prior to July, overall retail sales had risen every month this year, so it is a decrease from there, but energy's messing with everything, right? I've been talking about it recently in terms of the June CPI numbers, the July CPI numbers that we got in early August were compared to the June CPI numbers for month over month. The June CPI numbers had gas and crude and energy prices at very elevated levels, okay? You were sitting at about $120 a barrel coming into the better part of June, and you pulled back a bit. Now in July, maybe you were around $100 to $90 for the month of July. Now we're in August, and we're at a price level of $90 to $86 in the price of crude, okay? That, some of the impact going on in this market on these economic numbers that we're getting pretty regularly. Keep in mind, though, that trend is going to be very difficult to keep going in terms of, is crude really going to hit from 86 to 75 to 60 when we still have a war raging? Well, the news we got out of China yesterday creating a pullback was something that could really weaken the demand in that crude contract, and we're seeing it sitting right now at 86.92. We'll talk to our man Teddy, as I said, about 40 past the hour. But retail sales, they come in, and all things considered, pretty tame action, because we were already negative by about 35 points. I mean, putting this thing even on a minute chart to see the volatility since 8:30 this morning, we're sitting within basically a few points of where we were when we got that number, and you have a trading range of about 10 points in the S&P over the last 45 minutes. So we get to find out where supply equals demand in about 16 minutes from right now when the market's open. But seems like the market takes that in stride. Pretty resilient consumer, energy prices hampering everything. And to put that crude contract, we'll pull it back to a daily. Okay, I'm going to zoom in on the action. Here's where the month of June kicks off. We're at about almost 120. We go through the entire month of June, and we're still coming in at about 110. We enter July, okay? The whole month of July, we have lower lows and lower highs. We end July still at about $95, though, and we're 17 days into August, folks, and we're $10 down from there. So you're going to see these impacts probably on the August numbers that we get in early September. That will be the last guidance that the Fed's going to have on their September 20th and 21st meeting, I think it is. It's that week. Let me pull up the dates here. September 20th, 21st, I believe, is the meeting they have coming up in September. So it's interesting to play out that energy because, I mean, we got a lot of technicians, okay? Lower lows and lower highs, folks, all the way from June 8th at 122. It's a solid trend. That trend is still intact in a big way. All right, folks, stay tuned. We got the S&Ps negative by 36 points. We'll be coming back, talking to our man Kevin Hincks from Fast Market TD Ameritrade Network. We'll be right back.
Vista Gold owns and operates the largest undeveloped gold project in Australia, the Mount Todd Gold Project. Vista Gold just completed their feasibility study, resulting in a 7 million ounce gold reserve. Vista Gold has all major permits approved and has retained CIBC capital market assistance in evaluating alternatives and in completing an accretive transaction. Vista Gold trades on the NYSE American and TSX under the ticker symbol VGZ. Vista Gold, executing a strategy to create shareholder value.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. We get the S&P futures negative by 39 points right now. That's about 0.9% in the red. You have the NASDAQ 100 negative by 143, just off more than 1% in the red right now. As we kick things off, let's jump over to our man Kevin Hincks. Every trading day, folks, right here on Tiger TV. Fast Market from the TD Ameritrade Network. Kevin Hincks, Tom White, the outstanding team at TD Ameritrade Network. They do an outstanding job, folks, of breaking down whether it's the market, the news of the day, 3 hypothetical trades every single day. If you want to learn how to trade options, I know there was a discussion in the den today saying I got to learn how to trade options. Check out the program at 12 noon every trading day. Kevin Hincks, good morning.
Good morning, Tommy O'Brien. And some interesting idea for your listeners, Tommy. Today, we're going to wade into the belly of the beast. And in our third segment today, we're going to talk about Bed Bath & Beyond and how you should look at it, what you should know about trading names like this. So we've got an interesting show. We're going to trade Cisco in the first segment. We're going to look at Kohl's with Lightfolio. And then the third segment is must-see TV because we're going to wade into Bed Bath & Beyond, Tommy. But, third day of the week, third time that we're going to open a little soft. The first 2 days we've rallied off those numbers. Let's see what we do today, Tommy. The UK inflation data coming out 10.1% has got these markets a little spooked to start the day.
And what's your take on the retail sales? Pretty decent number. The market almost unchanged. I mean, we got a little bit of chop since 8:30, but we were pretty much negative by 30, 35 points in the S&Ps coming into that number. We chop around a bit. Gas, energy, of course, having a big impact, offset in some of the other areas. Seems pretty resilient consumer overall when we got some pullback in gas receipts, of course, with the price of crude. What was your take on that retail sales as we march forward?
Yeah, all things considered, pretty positive, though that headline number showing the drag that autos and gas, the uncertainty there that it's having on overall retail sales. But X vehicles, a big beat up 0.4. They were looking for down 0.1 X vehicles. X vehicles and gas, they were looking for up 0.3, comes in up 0.7. So overall, without, gasoline and the effect that it has on the auto industry, pretty solid retail sales number, Tommy.
What I was chatting about and just thinking about out loud to kick off the program, Kevin, was saying crude prices, man, we are just it just doesn't stop with lower lows and lower highs right now in that market. We're sitting at $87. We were just flirting with 86. Most of the June numbers had a price that started at like 120-ish, and you ended maybe June at about 110. You make it to 105. Then the month of July, you navigate from about 110. You finish that month out, July, at maybe 95-ish. We're already 17 days into August, Kevin, and we have crude down at almost another $10. The point being, seems like we're going to get similar effects for the August numbers when they come out because energy prices keep coming down. And I'm thinking that, we're going to see that effect play out at least until maybe the Fed next meeting if these August numbers pretty much line up with what's happening in July numbers. So you thinking about that at all? What do you think of that kind of take?
Tommy, every Tuesday afternoon we get API inventories in crude oil. And what I watch mostly with that number is the U.S. crude oil production. And it's up another 100,000 barrels this week, Tommy, to 12.2 million barrels a day. Now, the data we found out the other day that September shale is going to be a record amount of shale production coming. I think the U.S., remember, rigs are up, I believe it's 262 rigs were up since 2021. So U.S. production, let's face it, with all the politics about U.S. production, the pendulum swings, right? It was very unpopular to show any increases in crude oil production. Now, they're almost demanding it. And so now these crude oil companies have the green light to increase production, and I think you'll see them do that. You're seeing it in U.S. production. I think that's what's keeping a lid on crude oil prices. It's overall the U.S. starting to produce more, which we haven't done in the past. Now we are. It's amazing that we're doing that, and we're not where we were. Remember, the high in U.S. production was 13.1 million barrels under the Trump administration. We're currently at 12.2 million a day, Tommy. So getting better, but still not where we need to be. But the signs are that crude oil production is starting to pick up in the U.S.
That's some great analysis and information, man. I appreciate it. And yeah, pretty remarkable. When you're back to $87, not a lot of people probably would have called that even with 120 in the middle of June, or even we're trading at 110 just a month and a half ago in the crude contract. With that in mind, Kevin, we marched on. You talk about the three stocks. So the meme stocks, they're attractive. Give us a little teaser when you're talking about such an extreme volatility for the third segment you guys have coming up. Because, of course, as traders, looking for volatility, when you have a stock going from $16 to what, $27 overnight, and that's after being at $5 in August 1st, that's a daily I'm looking at. Give us a little teaser of what you guys are going to talk about in the third segment of Fast Market today.
How do you trade a name like Bed Bath & Beyond with about 80 million shares of outstanding shares afloat in the company that trades 340 million shares yesterday, right? Almost more than four times the float of the company traded in stock. How do you trade something like that? As you know, it's hard to borrow. You've got to understand what that means. We're going to educate our viewers on what it means, how to trade these things, the incredible, enormous volume. What it is, in essence, Tommy, it's a big game of musical chairs, and you want to be careful when the music stops, Tommy.
Oof. I like that. I like that analysis, man, that comparison. I've called it a game of hot potato for hundreds of millions, if not now billions, with what they're doing, but pretty similar action, man. We'll look forward to it. And coal's another interesting one in retail. They've had some volatility as well, back from some recent highs earlier this year. Kevin, we appreciate the time as always, man. You have a great one. We'll be watching at 12 o'clock today.
Have a great day, Tommy.
You too, Kevin. Folks, tune in every trading day. You heard it. It's going to be a good one. Volatility, right? Implied volatility. The amazing thing is that in an option market, okay, you can always say one side is too expensive or one side is too cheap. But if you really feel like that, you have the ability to be on the other side of that. Sometimes there's a bid-ask spread that creates a problem on that because the volatility is so wide that the spread you're paying alone from the bid-ask makes it very difficult to make up that edge. But if you think some of these options, some of the volatility priced into these equities, all right, taking a look, there's your action on Bed Bath & Beyond. $8 as recently as a week ago. We're trading at $29.97 earlier today. Now, lots of overnight action, okay, from $19 to $27 is the action. I'm going to jump real quick, though, to the option chain just to give you a quick glimpse, okay? Now, these prices were calibrated as of the close yesterday. Option pricing, options don't trade outside of open hours in the market, so you're talking about 9:30 till 4. So these prices stagnant as of that level, the implied volatility stagnant as of the close of yesterday. But you're talking about an equity yesterday that closed at about, 2065 was the technical close. And you had implied volatility. Look at these percentage numbers. Bonkers. And this is why I'm going to check out their segment because, man, Kevin, the experience he has, folks, Tom White, but the experience of understanding how these things move and the implied volatility. Because if you think it's too expensive, the point we're going to be, well, you can be the one selling that volatility, folks. So it can't be that easy if you say it's too easy. And the best thing about usually every single trade they set up, defined risk in a market like that. Stay tuned, folks. We'll be coming back for the open.
Of booming inflation, where your purchasing power is eroded, there's no better place to protect your hard-earned money than in gold. Vista Gold's flagship asset is the Mount Todd Gold Project in the Northern Territory of Australia. This is Australia's largest undeveloped gold project. We are talking a world-class gold project in a Tier 1 mining district. This is a large-scale, low-cost project with significant existing infrastructure in a politically safe and friendly mining jurisdiction. Vista Gold just completed the Mount Todd feasibility study, which resulted in a 7 million ounce gold reserve and a 16-year mine life. All of this, combined with the approvals of all major operational as well as environmental permits. This distinguishes Mount Todd as an attractive, de-risk partner, ready development stage gold project. Vista Gold trades on the New York Stock Exchange under the symbol VGZ.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We've got markets open right now. You're looking at an S&P negative by 36 points, pretty much right where you come into the retail sales number. You could say that pretty much in line. Fed minutes going to be the focus as we approach 2 p.m. Eastern time. You're talking about 4.5 hours from right now. Let's see how some of the stocks with earnings are opening. We haven't gotten into the action just yet. Target misses the mark after Walmart delivers. So basically, Target gives back everything they got from Walmart to the upside yesterday. You trade from 173 to 183. This thing accelerated higher almost the entire day till you got that sell-off in the market at 2 p.m. Eastern time. You were up big, $10 in the price to Target yesterday, and guess what? You give back all of that action right now, down $6.50% or 4%. We'll get into their numbers in a moment. Lowe's, on the flip side, they beat, but they give it back. Check that out. They were up to 222 when I was looking at them early this morning. They got a conference call going on. Not sure good news on the conference call. Lowe's dipping a bit, but that was on the acceleration they had higher following Home Depot numbers. You pull up Home Depot. Holding on to their gains, you check out Walmart on the heels of Target. They diverge. Walmart comes out of their earnings better than Target, and Home Depot comes out, let's see. Yeah, Home Depot comes out better than Lowe's a little bit as well. All of them, though, pretty well, right? You make it through Walmart, Target, Lowe's, Home Depot, all those stocks higher than where you came into the trading day yesterday early, for what that's worth. And this market, holds up pretty well with the S&P's down 34 right now. Jumping back to some of the economic numbers, just jumping around to some tweets. This is Liz Ann Saunders, Chief Investment Strategist at Schwab & Company, just really talking about the facts, though no opinion. The one I wanted to look at here in terms of the numbers, breaking down the sector highlights from the prior month. E-commerce, a big boost. Building materials up 1.5%. The big things weighing on it, gas stations down 1.8%. It had been up 2.5% the prior month. Motor vehicles and parts down 1.6%. It had been up. Retail sales up the prior month, 0.5%. Clothing down, had been up as well. Department stores down. All right. So what'd you have? E-commerce and building materials. Okay. Big numbers. Building materials. How about that? You're talking about July numbers of 1.5% from a down number in June of 0.5%. July retail sales 0% versus the 1% estimate, and you had 0.8% in the prior month. That was revised down from 1% in terms of the prior number. So we get that number pretty much in line, but energy having a big impact in terms of what's going on in this market. And I imagine right now, folks, that is the trend. We're going to talk to our man Teddy Kingstat next segment. We'll talk a little bit of crude as we're sitting at about $87. And as I stated, remarkable, right? Last Thursday at $95. If you said we'll be at 85, and look at the moves, 88 to 95 to 85. Volatility not done in that market at all. All right, let's see how some of the FANG stocks are opening with the NASDAQ 100 down about 1%. Amazon's down 1.4% to kick things off. Microsoft down about 0.6%. We jump over to Google. Alphabet down 1%. See how Meta is trading this morning, down about 1% as well for Meta. All right, let's jump around to see what else I had pulled up. Let's jump into the actual numbers of Target. So they missed on the earnings, 39 cents versus 72, but they pretty much come right exactly in line at $26.04 billion versus what they expected. Inventory still high, $15.32 billion at the end of the second quarter. They had $15.08 at the end of the first. One of the big things that Walmart said, I forget what it was, right? They cleared out like half of their inventory, and they expect by October, they expect by Halloween, Walmart was saying, to be in a great spot with their inventory levels yet again. Not the case with Target, man. They might be having sales for a longer period of time versus the sales going on at Walmart. Target says operating margin will be in the range of around 6% in the second half of the year, though, and that's from the 1.2% number in the second quarter was when the market really freaked out, right? When they just lost almost all their margins from where it was. So they're going to get back to 6%, but nonetheless, they got inventory problems, man. Net income falling. Total revenue right in line with what they were thinking about. 3/4 of their market share gains in food came from households with an annual income of $100,000 or more. You know, I've talked about it myself a little bit. I had the luxury of using Instacart, but we're approaching cost levels that just I'm not comfortable with, man, for that type of a premium. When you add in the cost of groceries, paying a premium service, I mean, even Publix, okay? I really enjoy shopping at Publix, but boy, some of their prices get really out of whack, especially when you compare it to a company like Walmart in particular, which is great savings, not the best shopping experience, as I'm sure we're all aware, But those comparisons are happening when the monthly bills are rising at the levels they are, man. And you're seeing it happen with these companies. One of the things Walmart said was that they're getting higher income bracket people to come to their stores. Comp stores for Target grew 2.6% on top of the 8.9% growth last year. Now, they were looking for 2.8, okay? But these stores have held on very well to all those big gains they got during the pandemic, man. You know, you pulled ahead so much growth that if you could just hold some of those gains, it's almost like the housing market, right? The housing market has had so much growth that's not necessarily pulled forward, but has achieved over the last year or two. Even if you just get stable prices for a year or two, the gains are still dramatic. And you might see that in the housing market with the supply issues we have going on and with rents where they are across the board in a big way. All right, let's jump to the UK inflation story. Kevin referenced it. 10.1%. And this is where it's a bummer, folks. You know, politics get into everything. Each side says anything good happening with the economy is because of their political party. Anything bad happening is for the opposite side of the party. You know, I scratch my head over Biden getting all the blame for inflation when it is rampant everywhere in the world, man. No matter what was going on here, this is a worldwide issue, and UK has hit hardest right now, and they got it coming, man, because they're projected 13.3% in October. They're at 10.1%. Food and energy prices, a huge component of what's going on across the globe, folks. Core inflation, 6.2%. You even take out food, you take out energy. The UK, 6.2%. And guess what? They're forecasting it's going up from here, inflation. They got some big issues over in Europe, man, in a big way. So, you know, the UK, they're on their own agenda in terms of where they can hike and so forth. But boy, they're going to have some issues, man, and you're seeing it play out here. Thankfully, it seems like the data is lining up that we may have peaked, whereas over in the UK, you are still accelerating, and that's going to be a tough deal. But guess what? At some point, folks, things are going to change. As in, you know, you see the move that we've had in the dollar, you see the move we've had in notes and bonds, etc. At some point, that will play out, that we will get that under control, right? We will be able to not be worried about the Fed hiking 75 basis points, multiple meetings going down the line. And maybe that will transition to higher yields in some other countries that will then flock to theirs. This is what we're going to ask Teddy about when you see this type of inflation numbers. You know, in the UK, all right, in Europe, how does that shape where those rates may go, and how does the rate structure of those different countries and their currencies shape the dollar movement, okay? And then how does that dollar movement possibly impact our markets and our yields as well as the circle goes around and round? Always an interesting conversation. We'll be right back in 3 minutes. S&P's down 31 right now, folks. You got the NASDAQ 100 down 125. And as we check in on crude, we got an 86 handle as we come back with our man Teddy. Stay tuned, folks. We'll be right back.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We get the S&P's negative by 38 points right now. Let's jump over to our man, Teddy Kegstad. Folks, we talk to Teddy every Wednesday at 40 past the hour. You can read Teddy's take on the market in his weekly newsletter, the Tiger Forex Report. Check it out at TFNN.com, folks. It comes out every Monday. He's got updates during the week. And as I talked about, man, coming into this segment, the way that we have everything impacting the markets right now, from Forex to commodities to rates to yields across the world, it's a great time to know what's going on in those Forex markets, even if you don't trade them, and how, in terms of how shaping they are of other markets. Teddy Kegstad, good morning.
Good morning, Tommy.
So we always get you on an interesting day. We get you on Fed Day sometimes. Today we get you on Fed Minutes Day, coming up at 2 p.m. Eastern Time. We just had the retail sales going on, but maybe we kick it off in crude, as we've talked about for a while, approaching some pretty lower levels. I think we got an 86 handle potentially as I talk to you right now, hovering around $86 for the price of crude. What's your take on this crude market?
Well, definitely where it's trading right now, that definitely is very bearish. Obviously, we're making lows. I mean, there's no denying that. You know, I'm a long-term bull. I think that one of the things you're seeing is a little bit of a balancing now. You know, you got to remember, 6 months ago, we were in a much different state. You know, we had such supply issues and supply chain issues that was impacting a lot of the pricing and stuff like that. You know, I mean, remember the ports in California were jammed up with tankers, going out as far as the eye could see and stuff like that. You had diesel trucks sitting idly, just burning diesel day after day, hour after hour, waiting to get, stuff loaded up on their trucks. As well as also Americans finally could get out, So now the things I think are stabilizing. Maybe that has a little bit to do with it. Gas prices aren't going down, so crude may be going down, but gas actually went up by us over 60 cents just over the past few days, So I'm still a long-term bull for the U.S. or for the crude oil market. Right now, I'd be very careful, but I'd be really careful selling into these lows. That's for sure. If anything, I'd be trading the options and not the futures right now.
Yeah, I mean, volatility in both directions, man, on these moves. We've seen a series of lower lows and lower highs, and pretty remarkable that we're talking about almost 2.5 months now of negative action, and we're almost back to where you were as a technical trader, man. You're talking about highs. We've looked at them before. They stick out on the chart just last October. Almost back to those price levels with everything kind of up in the air right now.
And I'm sorry, one real quick more thing to add to that. If you look at the further out months, they're at a premium. So no matter what, the expectations by the market is that we're going to have higher crude prices in the future.
Yeah, I mean, I guess that would make sense coming into the winter months or energy in general. I know Europe, that's a whole show we could do a conversation. Speaking of Europe, the UK inflation this morning, what's your action on kind of the UK over there? I mean, what's it, 10 point something inflation? They think it's going up to 13.3. I'm not sure if you were listening to the program coming into it, but right now we're in, a market where the Fed's the first one to act in pretty dramatic fashion, right? We're hiking 75, 50. We have higher yield. That's driving demand in the dollar that we've seen. At some point that should shift, Teddy, but, if it's a matter of, when, not if, that could stretch out for a long period of time with what's playing out right now. Do you keep that in mind as you look at these currency pairs, and where do you see that potentially, what kind of legs do you see the dollar having right now with this relationship, and do you see it changing at all?
Well, definitely I pay attention to the yields, because interest rates are definitely a function of currency pricing, depending on which leg you're talking about, which side you're on. But absolutely, there's one of the reasons the dollar is so strong is because our central bank is the most aggressive at raising rates right now. So that is definitely one of the factors that has helped to promote a bull market in the dollar versus most currencies. Now, when you talk about, like, for instance, the UK, they're in a disastrous shape right now. Obviously, their numbers are not looking good. And in the EU, it's even worse. I mean, Germany's falling apart at the seams, literally. Everything I've read on them in the past week just makes everything that I was looking at already a couple weeks ago look pale in comparison to what they're looking at right now. So, and especially because they're not raising rates like we are, that's going to cause a big, differential change between the strength of the dollar versus these currencies, So, I mean, remember how a couple of weeks ago we were looking at the euro and the pound rallying versus the dollar. Now, that move we've been talking about, or I've been saying, has been a corrective move, that you should view it as that, because the long-term trend has been obviously bullish the dollar. So we've definitely peaked in those currencies. I mean, the pound is the one that's a little bit more sideways because it has a little more stability than the EU. I mean, remember, the UK only has to deal with the UK. They really don't care what goes on in the EU anymore, Yeah. So that's probably, and I've been saying that for a long time, that as the US dollar is a bull against these European currencies, the pound's the one that's going to get hit the least. The euro, I think, is really, really set up for a free fall. I mean, there is nothing, even if they start to raise rates in the ECB, I don't see I think that'll slow the slide. It's not going to actually give it a lift, So,
they got some issues. I would agree, man. And I got it up here on a daily, and it's a pretty well-defined channel line, man. For those of you out there that love channels on a daily basis, I don't even have to draw these lines on this chart to show you that it's just bumping up against that upper boundary line. And boy, if you head down to the lower boundary line of that channel line I got on that chart, man, we're probably talking 97 at least on that chart.
Sure. And then as far as the central banks, you have to remember, too, now we have China, that they're under pressure for them to start easing rates, so which is a completely counter trend, idea as far as the central banks of the world are concerned. So, and if they start easing rates, that's going to really put the currency markets into a little bit of a tizzy. Most people don't think about the Chinese currency as far as how it relates to the rest of the world, but believe it or not, it actually does, So, because that would lift other currencies, not necessarily meaning that that's going to make them bulls against the dollar, but it does change things on the economics of things, because China's struggling. If you remember 2008, China was literally about 6 months to less than a year away from utter economic collapse, because when the consumer engine of the United States dried up, there was no more cash coming in. The rest of the world can't support the Chinese manufacturing engine. Even China can't support it, because the average people in China, except for in the major cities, they can't afford anything anyhow, So, and now you're looking at a situation where with COVID and all these lockdowns, that whether they've had it or whether the globe had it, it's restricted commerce, So all that cash, we know their books are cooked to begin with, but if they don't have cash flow, well, you can lie about your numbers all you want. You still don't have any money.
Right. Comes to roost, totally. Yeah.
So.
And the yen. Let's jump to the yen real quick. The yen, we're back to 135, pushing up where we were almost when we were, day before we were chatting some volatility. What's your take on the yen right now, sitting at 135?
I am bullish to yen again. I mean, it's interesting because with this huge slide that we've had in crude. Remember, crude oil was one of the reasons that I was very bullish to U.S. dollar yen for a long time.
Yes.
So obviously with this pullback, that is helping to probably keep the yen that's from where it was at. I mean, it topped out below 140 and came back to almost 130 again, which 130 is the magic number for Japan, because they really don't want the U.S. dollar yen above $1.30, excuse me.
Nice.
And now you look at how we bounced over the past couple of sessions. I'm a bull. I think we're going to go make a run for 140.
Folks, you heard the great education. Teddy, I appreciate it, man. I've learned so much over the years chatting with you, and just some of what you referenced. And check out the Tiger Forex report under newsletters, folks. Teddy, I appreciate it. We'll talk to you next week, man.
Sounds good, Tommy. You guys have a great day.
Have a great one. We'll be right back, folks.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got the S&Ps right now, negative by about 30 points. And checking out where we are, when you take a look at the price action just from the recent highs, I say recent, we're going back to basically the beginning of April in terms of that pullback. S&Ps blow right through the 618, man. We're still above that level, 42.78. Now, taking a look at the Fibonacci number from the full retracement of where we are, you're talking about a level that didn't quite make it. We're sitting between a 50% and a 618 of the entire move back. Now, you go back to where we were to kick off October, folks, remarkable. You have the S&P sitting basically where we kicked off the final quarter of last year on the heels of about a 12-year bull run, right? Let's see how some of those stocks that had their earnings are trading today. Target, they get back some of those losses to start things off. There you go. Target charging from the 171s to 177 almost. You're only down 2% on their numbers. Walmart catches a lift on the heels as well. Big numbers, man, for those retails. Walmart up 2.2%. Home Depot basically flat. Lowe's up 1.7% on their numbers. Kohl's coming out, I think, tomorrow, right? And TJ Maxx as well coming out tomorrow. Yeah, we get John Deere on Friday with their numbers. We also get Foot Locker on Friday. A little bit of volatility for Foot Locker this week as well. Let's check out some of the FANG stocks. Amazon gives back all the gains it had yesterday, off 1.7%. Let's see how some of the growth stocks are trading right now. Yeah, always volatile. Roku down 3.5%. Let's see how ARK's doing. Had quite a lift. Yesterday was a tough day. Down another 3% for ARK. We jump over to some of their biggest holdings. There you go, Zoom, down about 4% for ARK. They got Teladoc in there, down about 5.3% as well. DraftKings, down 1.5%. Growth stocks down 1% right now as we await the Fed at 2 p.m. Eastern time, folks. And don't forget, folks, every newsletter we do comes with a 30-day money-back guarantee. So please try them out. If you haven't tried the Tiger Forex Report out, folks, I've learned a tremendous amount from Teddy over the years. Excited that he's doing a newsletter at TFNN. And right now, folks, the way that these currencies and yields across the globe are shaping the markets and shaping where we go with interest rates, shaping what's happening with commodities, I encourage you to check it out because it has a real impact in markets because you impact the dollar, man, you impact the market across the board. Stay tuned, folks. We got our man Basil Chapman. He did his show live at 8. It's going to replay right now. Then, of course, we got our man Steve Rhodes live at 11, live the rest of the day.